Inheritance tax. What are the allowances and exemptions to help minimise any inheritance tax that I might be liable to? Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Inheritance tax. Now this is one of those taxes which has always been described as voluntary. However, for property investors, those that have a number of properties, we're probably more likely to be within the region of having to deal with inheritance tax than many other individuals in the population. And the reason being because our estate is going to be or likely to be over the inheritance tax threshold, which is sitting at $325,000, and it's been that for a while, and it's probably going to be that for a while to come. Do check out what it is when you're watching this video in case there have been any changes, but if we work with this figure, then we can see that quite quickly and quite easily we're going to be over that threshold when we've got maybe our own home and maybe 2, 3, 4 properties in our portfolio. If you have your properties in a limited company, then it doesn't mean you're going to be exempt. It just means it's going to be the value of those properties in the company and potentially the proportion of shares you own. So if you own 100% of the shares, then whether it be in a company or in your own name, you're still going to have the value of those properties. If you have it with your spouse or maybe with your children, then you may have reduced your inheritance tax already through some very simple planning. But you may still be over that inheritance threshold. So today we're going to have a look at some of the exemptions, some of the allowances, some of the things that are quite simple ways to minimise potentially that inheritance liability. Let's jump into the first few ideas then. So the first one is there is a spousal exemption. So if you are legally married, you can transfer things between you and your spouse without any tax consequences. Now, depending what they have in their name and what you have in your name, this may be one way to balance things out, so that rather than one of you has a very large amount, you may be able to pass it over to your spouse to spread the wealth, spread the estate, so that you are starting to minimise what you personally hold. Now, I appreciate in certain circumstances that's not going to help. So what are some other ways that we can be looking at minimising our estate? Well, one of the first simple things is each year we have a $3,000 allowance to be able to just give away some of our estate. So it's not a large amount, but over a protracted number of years, if you give £3,000 worth of gifts to children, family members, friends, whoever it may be, it does start to add up over the years. So it's just another simple way of reducing your estate down. Obviously, this is cash. So you may have to look at how you have cash rather than assets, but it's definitely a way to consider reducing what you have on your estate. Now you might say 3,000 isn't an awful lot in a year, but there is some additional allowances when it comes to family members getting married. So in terms of family members getting married, if your own children get married, then the taxman says that you can give up to £5,000 worth of gift for that occasion as a gift out of your estate. If you're past the stage of your children being married, then if your grandchildren are getting married, then you can be gifting them up to £2,500. And if it's getting even further along than that and you've got great grandchildren or potentially anyone else, you can give a gift of up to £1,000 if it's coming out of your estate. So there are just a few extra ways, especially at bigger times in someone's life, where you may be choosing to give larger sums of money away. There is also an allowance where you can be giving an individual gift of up to £250 to anyone, as long as it's not combined with any of the other allowances or exceptions. And the final gifting area is probably charities, because if you want to gift things to charities, then there's no particular limit on that, and they're quite happy for you to be donating to charities, which is reducing out of your estate. So that is all of the different gifts, but you might go, but actually it might not need to be a gift. So one of the key things that you really need to know is if you are reducing your estate, or if you're using the money that you're getting in, so you get a healthy rental income, or you get money from a pension or whatever you may be getting, and you don't spend all of it, then potentially you can be gifting that away, giving it to others, spending it, whatever you may be. And if it's money that's just coming out of your normal income, and it's out of that normal expenditure that you receive that money and you can spend it each month or each year, then there's actually no tax consequences, there's no limit. So if you're getting in 5,000 income a month, then potentially if you spend all that 5,000, there's no issues from an inheritance tax point of view. The issue potentially comes if you're putting that money into an account or investing that money and actually making it worth more, which is fabulous. However, from an inheritance tax point of view, you're expanding your estate, which means you're probably going to be paying inheritance tax in the future. So at a certain point, you may need to start looking and going, well, actually, what are we doing with this income? Can we start actually utilising it, gifting it, giving it away, whatever you want to be doing to help minimise the impact of inheritance tax? If the money that you're spending is classified as maintenance payments, then this again isn't allowable. The taxman aren't going to be treating this as payments out of your estate for inheritance tax purposes. They're going to be looking at this as maintenance towards looking after someone. So this could be potentially paying educational fees or looking after someone for rent or kind of general expenses that you are assisting someone with in the day-to-day living of their lives. So this might be children, grandchildren, family members who you take responsibility for. So again, just a little something which is not out of your estate, it's just your normal spending, and it's that you're actually potentially caregiving, so it has no impact on the inheritance tax side of things. One way to reduce the inheritance tax that becomes payable is on your unfortunate demise, that you can actually give away some of your estate to charity. And if you give away 10% of your estate to charity at your demise, then what you'll be able to do is reduce your inheritance tax bill down to 36% rather than normal 40%. So it has a slightly less impact on those paying it. Obviously, you've got to be happy that you're going to be gifting 10% to charity, and you have to make sure you're happy with the charity that you're going to be gifting that to. But again, another way of helping to maybe reduce the tax payable rather than the amount of your estate. But again, another tip, another trick, something to help minimise the impact of inheritance tax. One great thing when you own your own home is what they have done is they've expanded the Nil Rate Band. So this 325,000 that they currently have available for it, they've said actually if you've only got your main home as one of the things that you've got, then you may be able to expand this Nil Rate Band. And what that means is that rather than you pay inheritance tax when it's your own property, then potentially they've expanded it up to 500,000. So if your property is worth say 500 or maybe $1 million if you are two people together, then it will just minimises the inheritance tax you have to pay, because you won't pay it if it's on your primary residence. So if you think that that might be useful, then please do check out the other video which is coming on this to just explain that aspect further. The final thing I want to mention on our video today is about the potentially exempt transfers. And the reason for mentioning this is because we've got something called the 7-year rule. And there is a separate video on the 7-year rule, as it's quite an important one, especially when you have a sizable estate. But what a potentially exempt transfer is, or PET, which you'll hear it called for short, is where I gift away some money. So I might say I'm going to gift you £100,000. Now obviously that is over our £3,000 limit, so it's definitely not going to be exempt allowance. It's definitely going to be taxable. However, if I give it to you today and I live another 7 years, then that transfer is actually exempt for inheritance tax purposes. So there's some quite interesting ways that we've seen people using these 7-year rules and the potentially exempt transfer to minimise those inheritance tax transactions, to minimise how much tax that you would be paying. So check out the separate video on the 7-year rule, which will explain how that works. But the general premise is that you need to live for another 7 years after you have made a substantial gift to a family member or several family members, depending on your position. Inheritance tax is one of those taxes that is voluntary. We can do some planning around it, we can gift different things. So if you do sufficient planning, you'll have minimised it as much as possible. The first step I'd recommend anyone does is make sure you keep track of your assets and liabilities so you can see what the value of your estate is today and keep track of it so that you know over your lifetime what's happening with it. And this way you'll know how inheritance tax is going to impact you and you can do some planning. Hopefully today's video has given you some ideas on what you can be doing to help minimise from the simpler point of view, and check out some of the other videos on how you can minimise your inheritance tax legally, appropriately, to make sure you live your best life, but also you leave something to those family members that you love and care for and want to gift some of those precious pennies that you have collected in your lifetime. Hopefully today you've learned how you can be minimising the impact of inheritance tax. If you do have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing.